Hi, everyone, and welcome to the Strategic Wealth Strategies Podcast with our host, Alan Porter. Alan, what's going on, man? How are you?
I'm doing great. It's a beautiful day here in North Carolina. Hope to play a little golf this weekend,
All
but
right.
we'll never.
Go figure. Golf, and you get to deal with the beautiful weather, and it gets cold and warm in Pittsburgh. Go figure. I miss Texas sometimes. All right.
Yeah.
Our topic today is more problems with the 401k. Alan, we went over problems with the 401k. So now there are more problems. Please
Well,
explain some of these.
there are. I mean, uh, your vesting in these. There's four of them. I'll go over each one of them. But people, I don't think they're aware. They're working for these companies and they're not aware about vesting when it comes to their 401k, or they're aware of it when it's too late.
Yeah, and it used to be great when we had those unbelievable pensions, especially teachers. The Diocese of Pittsburgh, when I was a teacher years and years and years ago, I got vested for a pension, which I gave away now, but it's gone. Say bye to it. But I don't know it anymore after the divorce. But I was vested based on the number of years I taught, but it was a
Right.
pension. It was a pension. It was like it was annuity. It was guaranteed.
Yep.
These 401ks aren't until you get vested. So kind of just explain vesting a little.
Well, most people when they contribute to a 401k, they're have to be vested to get the entire 100%. And most companies out there, over 50%, say you have to be vested over a 5 year period. And many of them, if you don't serve out the 5 years with that same company, you get zero of that contribution from your employer. Now, understand this. That could be absolutely huge for people. But this is a statistic by the Bureau of Labor Statistics. The average person changes jobs every 4.1 years.
See that's the problem, right? Because if you don't, what happens to your 401k if you don't get vested?
Well, I mean, it's just like the people. In fact, I had a client last week. He's telling me how much money that he thought he had in his 401k, but he'd left his company before he was fully vested. And he lost all that what the company had promised him and invested. And he was not aware. I mean, it was his own fault because he didn't educate himself. But that was several thousands of dollars.
And that's killing. I mean, that's hard work that you did working in that job that you lost because you weren't vested.
Oh,
Yeah.
it's terrible. I mean, and then the other thing too, number two, is like the deferred taxes. You know, everybody's going on about how well the economy's doing and this and that. That's just not the true economy. Inflation doesn't take into effect the price of food or fuel. And the gain that we have now with the present administration, even with the stock market reaching new highs, that's only a 6% gain. And but the administration before, when that was going through their stock market, it was a 36% gain. And they don't tell you the whole story like the government. I mean, they spend money like drunken sailors. I mean, it's amazing. We can send billions of dollars across the nation, across the seas, overseas to help people secure their own border, but we can't secure our border. And also it's just crazy. They're starting wars that we don't need to be involved in. It just goes on and on. But billions and billions of dollars are going overseas where we can't even house our homeless, fix our border problem. With just a portion of what they've sent overseas just to Ukraine, we could have got all the homeless taken care of, found housing for our homeless veterans, improve our veterans' care, and secure our borders. But obviously, that's not what the boys in Washington want to do.
No, it's definitely not what they want to do, and what we're dealing with. Can you tell me what is paper wealth?
Well, let's go back a minute to the taxes, because the
Yeah.
taxes people don't understand. The taxes alone can consume 1/3 to one half of your retirement. And when you go to finally, take your money out of your 401k, you're going to be taxed at whatever the government says the tax rate's going to be. And if you don't think taxes are going to go up, I got swampland in Florida to sell you. because I
Even
think
even with taxes at what there are, Alan, you're paying a lot out when you're losing so much in the market all these years. Let's just say taxes are the same.
yeah,
Still,
it's
you're gonna get
taxes the
killed.
same stuff. But they said, I asked people, I said, well, I'll go with that over paper wealth. People, I ask people all the time, man, you're making a kill in the stock market, aren't you? They said, yeah, I'm making all kinds of money. I said, you're not made anything. That's paper wealth. You don't realize any of that gain until you cash that out. But then when you cash it out, you got taxes to pay. That money doesn't belong to you. People say, well, I got $2 million in my 401k. And I asked him, I said, well, who else it belongs to? He said, well, no one. There's my name right there at the top of the account. I said, no, you got a partner in this. It's called Uncle Sam. And tax is going to consume over 50%, especially if you're in a higher tax bracket. Between state tax, AMT tax,
Oh, yeah.
federal taxes, things like that, it just keeps mounting and mounting and mounting. People don't realize the highest tax rate. Now, this is for the wealthy. I mean, the most, the wealthiest. And during World War II, it was at 94%. 94% of anything that people made over $200,000 went to taxes. And that's
It's
just
it's unbelievable. And so that paper wealth, you think you're worth it, but you can't. It's you're held
no.
hostage, as he talked about,
You
because
can't. You just can't say, okay, well, I've got this, and this is what it kills me, Neil. I see all these advertisements by Goldman Sachs, Lehman Brothers, and all this. What's your number? If you need this much money in retirement to retire, well, that's fine. If you've got $5 million in a stock portfolio, that's not guaranteed. You may have $3 million in a year. It depends on what the market does. And with the M2 money supply being at recession and depression levels, now what that is, Neil, is the money that's lent out to the businesses to provide to produce products for the American people, because we're consumer-based society. And if they can't produce products, then we got big problems, because it's at recession and depression levels right now. Nobody can get money to produce these products. So the employment's going to start going up again. And here they said, oh, the employment's gone up so much. Well, how many of these illegal aliens now has jobs? They count that stuff. It's crazy.
No, not at all. And I just start thinking about it. Your money's hostage. Alan, let me ask you, because you're a financial guy. If you invested in a business, right, and that business sold, you definitely have that value, but you can put it in so many different things. Like, you would probably recommend putting it in a cash value life insurance policy, right? Like, say you bought a business, you got equity in a business, and that business, you could sell your shares. You throw it into something like that. A
Well,
lot of
Neil,
times,
here's something I always ask people, especially business owners. I said, how do you plan to exit your business? They said, what are you talking about? Well, what are you going to do when you sell your business? I said, would you rather have a tax deduction, or would you rather pay capital gains tax on that? And they all say, well, I'm a tax deduction. How do you do that, Alan? I said, well, it's not how, but who I know that knows how to do that. That's why I have a team of people that I work with, Neil. And there's all kinds of things that you can do. It's just like, protect yourself. Let's say you have a successful business, and your daughter gets married to a bum that you don't like. Protect her, so they get divorced in a couple of years, and now she gets half of your business you built a lifetime to develop. Well, listen, that stuff doesn't, with my clients, I'm protecting them for all that. It's just, and it's like another thing is, I call it control from the grave, because you can do with whatever you want to do, and through trust that are properly set up, to control what happens to your inheritance. Because I've got millionaire clients. Well, I don't want my son to just get millions of dollars. He's got big problems and drugs or whatever. I said, well, there's one thing you can do is set up a certain type of trust, and if he gets any money from the trust, he's got to be drug tested every year. If he doesn't get a job, then he gets no money, but you'll match anything that he makes on his own. So he basically doubles income if he wants to work. I mean, there's all kinds of things you can do.
But you need the team of people
Exactly.
to help, especially business owners. I think business owners miss that boat especially when they're looking that they can sell their business. I've heard a lot of people just quit their business instead of selling it, Alan.
Yeah.
And that's crazy, right? and they have
Exactly.
an EBITDA and all that. And I don't want to sell it. I'm just going to let it go and be done with it. And they could have gone to their family. Go figure. Okay. What about the fees? I know that you have
Oh,
explained this before, and it's very important. It needs to be explained again for
well,
401ks.
we just started off with taxes taking half to a third of your income. Well, if fees, a 1% fee over a 30-year period, Neil, will reduce your income by one third. And the average fee in a 401k is 2.99%. So now on that gross figure, they'll have either one third or one half of that. That's providing they don't have a market loss. And then taxes are going to take a third to a half of that money. So your money that you're getting from your 401k is not, that's not, like I said, it's paper wealth. You don't know how much money you're going to get.
And that's the big thing. And Alan, again, you think out of the box. A lot of people don't think out of the box using this strategy of annuities and cash value life insurance and having a team of people around you. It's a very intelligent way of doing things. What can a person with a 401k do in a situation like this?
Well,
If
there's many
they're
things
with their yeah. Mhm.
Yeah, there's many things they can do, but like I said, Neil, I educate people to think outside the box. And I asked them, I said, what if I had a financial vehicle that, by my estimation, is in a class, a financial asset in class all of its own? You can take advantage of our progressive tax system. You turn forever taxable money into never taxable money. You're protected from lawsuits, liens, and judgments. It provides you tax-free income in retirement and before. You become your own bank, borrowing from yourself and paying yourself compound interest and not the financial institution. You're protected from market risk. You're protected from government risk. You're protected from tax risk. You're protected from longevity risk. You're protected from sequence of returns risk. I mean, the list goes on and on. And I said, you can also provide a tax-free legacy for your family. And everybody said, well, there's no such product. I said, yes, it is. It's cash value life insurance and properly constructed fixed indexed annuities, because you can get rid of all of those risks in retirement that a stock portfolio, a savings account, a real estate investment, or a bond portfolio only compounds. Because
Wow.
your
Yeah.
savings account, anything made on it's taxable, and once you send it, it doesn't grow. And the stock portfolio, oh my God, sequence returns risk will decimate your retirement.
100%.
There's no guarantees with that. Like real estate, they're talking a 40% loss in commercial property in the coming months because commercial property is not doing well. And then, if taxes go up, bond prices go down, vice versa. So, cash value life insurance and properly constructed fixed indexed annuities can get rid of all these risks, give you guaranteed income in retirement. And I tell people, I said, listen, I'm not going to make you rich, but I'll make sure that you have guaranteed income for life, even if your assets run out. So you're going to live a more healthy, less stressful, happier, and a longer life. And that's what it all is all about. When you go to retirement, you don't need that extra stress of running out of money before you run out of life.
Totally. It's huge stuff, Alan. And people can contact you by emailing you at strategicwealth0@gmail.com or call you at 910-551-1046. New website in development. This 2024 is going to be a killer year for Alan. There'll be ways to communicate in so many ways. You'll find Alan Porter everywhere on the internet. And when you talk about the guru, when it comes to your financial wealth and your retirement, it's Alan Porter. Appreciate it, Alan.
I appreciate you, Neil. Thank you.
All right. That was the Strategic Wealth Strategy Podcast, guys. Take care.